Hey, this is Matt from InvestiQuant. Today is Tuesday, September 21, 2021. Yesterday, the markets moved lower again, but found some buyers coming in late in the day. With the move lower, we closed below the lower Bollinger Band, which is an oversold reading. So that's what we're going to be looking at this morning, is what has happened following a close below the lower Bollinger Band. So let me go ahead and get this set up in Discover with all four instruments. The setup's based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading higher. We are trading up above yesterday's high in some of the instruments, but not all of them. But since we're not doing it in all of them, I'm just going to use gap up for this study right now. If you want to come in closer to the open and select open above prior day high, that does change the pattern a little bit. It does make it a little bit more bullish if you open above the prior day high, but I'm going to leave that out for now because they're not all trading above the prior high. Next, I'm going to go into the indicator section, and I'm going to select this oversold setting where you are below the lower Bollinger Band. I'm going to do that by clicking equals here next to day after close below the lower Bollinger Band, and then I'm going to put it below a 10 and 200 and above a 200-day simple moving average. So I just clicked below a 10 and now above a 200-day simple moving average. Now I can click view results. And here we go. These are the results based upon entering the market long when you gap up and the prior day closed below the lower Bollinger Band, but above a 200-day simple moving average. I added the below the 10-day moving average there, but it's probably not necessary in this study. So in a weak bull market, a close below a lower Bollinger Band followed by a gap up. We've got 87 samples in the S&P dating back to 2003 for this pattern. We've got 83 in the NASDAQ, 76 in the Dow, and 95 in the Russell. The win rates on these are coming in favored for the S&P at 59%, the NASDAQ 58%, the Dow gets a little bit more neutral at 54%, and the Russell coming in at 57%. So all of them at least better than 50-50, some of those close to 60%, but not quite there. Average win versus average loss. The average win is larger than the average loss for the S&P, which has the strongest win rate, as well as for the NASDAQ, which again has one of the more favored win rates. For the Dow and the Russell, they are very similar in size, and those are the two weakest win rates. So S&P and NASDAQ have both had favorable win rates with larger average wins compared to their average losses, and the Dow and the Russell are just a little bit weaker on those win rates, and the average moves have been pretty similar in size. But historically, it has been a little bit more favored towards the long side. And as I said earlier, the opening location, if opening above the prior high, it does get better. That being said, it gets rid of quite a few samples, so I did not show that in this instance. But if we are to open up there, the win rates and equity curves and stuff get a little bit better looking just on smaller sample sizes. So hopefully you found that helpful. Good luck today, and we will see you next time.